What's going on, guys? Welcome into today's show. I've got a great guest for you, my buddy, Michael Pouliot. He's got an amazing story going from working on Wall Street, W-2, to deciding to bet on himself and going all in on real estate investing, starting with a very small $25,000 single family investment that he ended up burying. And we talk all the way through now where he's at today, which is doing $100+ million deals. So you want to talk about, right, starting small and working your way up and what that looks like. He shared his, mindset and perspective, many different strategies on how he structured deals, partnerships, the relationships that really transformed his journey, how he raised his first million to now, how they're literally getting $1 million checks thrown at them, the amount of deals that he has to look at, the skills that he feels that are most critical as a new real estate investor, and what translates best into where he's at today. So just so many cool stories, and I always love hearing different perspectives of really positive, optimistic, massive action-taking individuals like Michael. And he still managed to do that while building a beautiful family with his wife, 3 kids. They're expecting their 4th. And some of his outlook on what he's focused on next, how he's implementing and integrating AI into his world. So many cool things that I think you guys are going to enjoy from today's episode from a wealth building perspective and a mindset perspective. Let's go ahead and dive into Michael's episode right after this quick message. Michael, welcome to the show, brother.
I'm so glad to be here. I'm excited. I'm a longtime listener, so this is like an honor. I'm like,
it's always one of my favorite things about podcasting is just getting to meet so many awesome people, having amazing conversations, and the world gets a lot smaller when you have a, somewhat of a brand or, some type of outlet like this to just, align and connect with like-minded individuals. So glad to have you on the show. There was a lot of things that you and I were chatting on before hitting the record button when it comes to family, your kind of passion for real estate and, deciding to take that leap of faith, leaving Wall Street, getting into the real estate game full time, now $1 billion worth of transactions later. I'm sure there's just a few things that you might be able to share in terms of lessons and learnings and, wins and probably some bumps and bruises along the way that can help our listeners, extract some value to apply to their own journey. So why don't you take us back a little bit to, when you were getting out of school and deciding whether you wanted to go to Wall Street or, what were you exploring at that time and what landed you there? Why'd you end up going to the Big Apple and jumping into Wall Street?
Sure. So thanks. I grew up in the Northeast. I grew up in the tri-state area, right outside of Manhattan, and so finance was sort of like the the thing to do potentially. And also this was before like the software development, like our software engineering became very sexy as a career. So finance seemed to be like, okay, I'm in the tri-state area. It's the sexy thing to do, make a lot of money. I wear a nice suit. Of course, now I haven't worn a suit in quite a while, but, yeah. And so So that was kind of like the thing, and I didn't really think much of it. I just said, "Hey, I'm going to either go into finance or I'm going to be a lawyer." And people always thought I had a fresh mouth, so people were telling me, "Hey, have you ever considered being a lawyer?" And that was their nice way of saying, you should just, shut the heck up.
Yeah, so, you're a big talker.
So anyway, I don't think so. I don't think my wife would think so. But when I was a kid, maybe I was a little bit, a big talker. So, or maybe I was just fresh. Maybe I just talked back too much.
Yeah, I'd say a little bit talking. Might have gotten you that label.
Right. Yes. Yeah. And so I went to school in Boston, which is where I met my wife. And decided while I was there, I pursued finance, and then there's some story in between there, but I ended up landing myself in New York City, working for first at Merrill Lynch in Boston for my junior and senior year. I had the opportunity to graduate early and decided to just go part-time so I could graduate with everyone else. And then, decided to take a part-time job. So I was working sort of like half-time and going to school half-time for junior and senior year at Merrill Lynch, working in the financial advisory space, and then moved down to work at JP Morgan in their fixed income analyst program, which was a lucky break for, it was 2011 at that time. So there just weren't a lot of analysts, honestly, in the class.
Yeah.
Because they weren't doing hiring. So Yeah. So, yeah. And so I sort of rolled into it based on that. Yeah.
And looking back, I always hear people that are, in the commercial real estate space. Many of them come from kind of those white collar careers or, educational backgrounds, right? That everybody thinks in order to be in commercial real estate, like you're an institutional guy, you're a Wall Street guy. And I'm sure there are some advantages and edges to playing in that world that you've carried into your commercial real estate investing journey and just your investing journey as a whole. What are some of the things in terms of skills, knowledge, confidence or mindset that you took out of Wall Street that you brought into your entrepreneurial journey in the real estate space that people don't need to go to Wall Street to get, that you learned, along the way?
Yeah. As you were asking that question, one thing came to mind, and in particular, which was I had a boss. I think mentors is that's something you can get anywhere, and so good mentors you can find, in a variety of different places, whether they be in education communities or they're at employers or they're in your family or what have you. But I had this one, when I was working at JP Morgan, I had this one boss. I had a number of really great bosses, but looking back, it's great bosses. When it's happening, maybe it doesn't feel that way. But where she said, that you needed to have a sort of an intense level of paranoia when you were working with clients. Mm-hmm. And I think what I learned from that was just, and they had this sort of like 2-strike policy in JP Morgan. Maybe there's this like a similar in other banks, but one mistake in front of a client and was a warning. The second mistake, you got fired. And so that intense level of paranoia was around making sure that you were really well prepared and that you made you were over prepared and that your materials were tight and that you didn't have any mistakes in your client presentations. And and I think that kind of play hard, work hard mentality really takes you from that environment where you're working, you learn how to work really hard and then you can do anything because I feel like anything can be accomplished in a day. It is sort of like the mentality that comes out of working in banking. It's like, okay, I'm working all day and then someone gives me something to do at 6 or 7 o'clock at night. And I just know it has to get done everything has to get done by the next day. So that level of training of just knowing that you can work hard, and you don't have to get that from working in Wall Street. You can get that in a variety of different places, or you could get that from, working out, or, there's a lot of different verticals where you can just know, in your soul that hey, you can get the work done and it's on you to do it. And as long as you believe in yourself in that way, almost anything is possible. So yeah,
that's a great one.
I guess it's a grit type of thing.
Yeah. It reminds me of, I remember watching, this was maybe a few years back, but when I was, really, into Gary Vee's content, which I still love Gary Vee. Mm-hmm. He had said, hey, I this year, I'm either not doing meetings or every single meeting that I do is 10 to 15 minutes max. Mm-hmm. And so, and he's like, and the crazy thing is the people who normally think they need 30 minutes or an hour to get something done, when I put boundaries around, hey, this is the time that you get, people, find a way to, at least the right people and highly talented individuals, they find a way to compress the results that are necessary into the time that is allotted. And it was the only thing that shifted was literally the mindset around, this is all you get. And so you better make the most of this time. And here's what is expected of you during that time. And so to your comment, right, the framework of it's got to get done this day. Mm-hmm. We're not stretching these things out into multi-day projects or weeks or months like most people do, right? It just reminds me velocity of action is always rewarded when, obviously you want to be prepared, not be making mistakes, but moving fast is something that, especially in this world, seems to be rewarded in a lot of ways. And then that healthy level of paranoia, right? Of just always making sure that you're kind of watching your six, that you're coming prepared, you're showing up the way you need to. Obviously in the real estate world, those are great things that, translate over and get you good results. Talk to me about getting into the transactional space and, obviously being in and out of so many deals. Does $1 billion in deals sound pretty wild to you? And how the hell did you guys achieve that?
So I think in the beginning, it was, I don't know. Like it always, you just wake up one day and you look at all the deals and you're like, oh, okay, it sounds like a big number, but when you're going from today into the future, it's like one deal at a time.
Right.
And it started with just one single deal. I bought a $25,000 deal, kind of bombed out, 900 square foot, 2-bed, 1-bath in Grace Ferry in Philly, which was an up and coming neighborhood in South Philly, basically, in 2015, 16, and did the Burr method on that, and then just like, wow, I can do this, I can buy this, I can renovate it, I can, the bank's going to give me more money than I put in, and then I'm just going to have my money back and then make cash flow, and I could do that again, and I could do it again, and I could just do it. How many times can I do it? And it turns out you could do it quite a lot of times, especially if people just keep giving you the money back and everyone just keeps rewarding you for what you're doing. So, yeah, I would say it just starts with one deal at a time, whether it's $25, $25, maybe not $25, although you can get, maybe you can get but if it's 25K or it's 25 million, it's sort of the same thing when you're you're just taking one step in front of another. And I wouldn't recommend starting at $25 million deals, but you progress from the start, and then you just take it one deal at a time, and that's how we've done it, at least.
Yeah, no, talk a little bit.
We learned a lot along the way.
Yeah, I was going to say, talk a little bit more about that evolution, right? Because obviously, you would have had to have done a lot of $25,000 deals in order to get to that $1 billion in transactional volume and kind of investment. So talk about the evolution and the mindset that was specific to your journey, obviously. But I'm, guessing, looking at the numbers, right? Gradually over time, you started getting into bigger deals. I'm sure bigger, capital stacks, maybe different partnership structures. Before you dive into that, what were some of those initial skills, like foundational level as a new real estate investor, looking back, all the lessons that you learned that you felt, hey, don't worry about all this extra stuff that you feel like you need. Like, just focus on a couple of these foundational building blocks that will get you started, get you building confidence, get you building skills. What were those for you from your experience?
So in the beginning, I think, I did have some, financial knowledge, right? So financial analysis, things like that. So it wasn't daunting to me to do analysis on deals, because single family deals are, you could do them on a back of a napkin. They're pretty, simple, the analysis you have to do. But I would say generating deal flow and analyzing deals is probably like the first set of skills that you need to have. And it doesn't take any real money or anything but time and just consistency of looking at deals, talking with participants or sellers, depending on which way you're going to go. In the beginning, for me, I talked to people who already had deals, people who are wholesalers or agents in the market, because I didn't know, what I didn't know. And I said, hey, I'm going to trust these experts. They're going to tell me kind of what's the path of progress, where are the good opportunities, where can I buy properties at a great price. And then I sort of go from there as you just sort of build as deals develop, from acquisitions to transaction management to construction and project management and dispositions. You just learn those skills kind of while you're flying the airplane in the beginning, and you just hope that you're not flying an airplane that's too fast for you, right? You don't want to get into a 747 and be like, oh, actually, I don't really know how to fly an airplane. But if you're just flying a Cessna to start, the worst thing that could happen is you get a little, well, obviously, if you're in an airplane, you don't want to be in an airplane if you know how to fly an airplane. But for the purposes of the metaphor, the small airplane is great because you're going pretty slow and you're not going to run into anything too bad, and you're going to have hundreds of dollars worth of problems, or a couple $1,000 problems to fix. An HVAC goes out, or you didn't account for a roof. Those are the types of things that then you set you back a few grand, but you learn a great lesson, and it didn't wipe you out. And so that's, I think, the beginning was really just getting in front of a lot of deals, understanding the pattern recognition of deal flow. And you can do that by having conversations with brokers, with wholesalers, by looking at a lot of opportunities, and just look at, it's not 10. I mean, like hundreds of deals. Look at hundreds of deals.
Yeah.
And that may sound daunting, but once you start getting that system going of people start bringing you opportunities in your market, it's very quickly you can look at 100 deals and buy and then you're ahead of 90% of the game, because most people are tire kickers. They look at a couple deals and they give up. And so if you can just get past that initial like mindset problem of like, I put 5 offers in and I didn't get anyone to call me back. Like, I mean, we put in 5 offers and it's only lunch. So like, you have to just, and you build that skill over time. It's not like you're going to get there day one, but just know that it's going to take a lot more. It takes a lot of effort, but it's rewarding on the other side. You just got to put it in.
Man, such a good point. I was talking with a buddy of mine who runs a hedge fund. They're based out of New York, and they do a lot of retail, commercial stuff. And he said that they had to look at 5 times as many deals last year to get a quarter of what the fund normally buys on an annual basis. And at the end of the conversation, he's like, it doesn't matter if you're a new investor. It doesn't matter if you're a seasoned hedge fund like us, who everybody knows is always buying. It's about volume. It's about volume of conversations. It's about volume of face-to-face interactions. It's about volume of deal flow and looking and analyzing deals, right? Like, because, the mutual friend, David Osborne, always says like, repetition is the mother of all success. So the more volume you can get in the areas you want to get better at or that you want to succeed in, that's really where you need to lean in the beginning. Now, when you are, thinking about that evolution of, okay, I did my $25,000 deals and you started, my guess is at some point in time, you and I were chatting about always like, you kind of climb a mountain and you're like, okay, what's next, right? So like, talk about that evolution and that timeline for you of like, what led you into going, I think I need to get into some bigger stuff and I want to start looking at commercial.
Sure. Yeah. So my wife always has this saying that she says to me, because whenever I bring, I'm like, oh, I got another deal. And she's like, bigger, better deal, bigger, better deal. It's just like kind of mocking me a little bit. But, for a long while, it was every single deal was bigger than the last one, and it was, which is still pretty much the case. But, that being said, we got into a nice range here, but now at this point, and we still do we do single family too. But, so yeah, I would say, it took about, I did about 50 to 100 transactions in the sub $1 million space, in the beginning to really get my feet wet. I was able to do most of those with my own money because, this was also in the mid 2010s where, there was a lot of stress still. You could buy properties at great prices and banks were starting to appraise them at nice prices. And so you could really do that burst strategy pretty effectively and rates were great. So home rate loans were like 7%. And so, and then you could get like 95% 90% leverage. Like, so it's like, and I didn't have anything to lose at the time. So it was like, I had I had nothing to lose. I was highly levered. I was putting no money in and I was getting all my money back. So, those are the go-go years a little bit, but, so I did about 50 to 100 of those deals. About, I would say, 30 of them were buy and holds. Another 20 or so were foreclosure type like flips where I would buy them in foreclosure, do a little bit of rehab, and then put them on the market and resell them, kind of low margin flips. And then that's when I started saying like, wow, like I'm spending all this time and effort with my initial intention was to build cash flow. Like that was my goal, right? My goal was I wanted to leave Wall Street and build cash flow. And I was like, I need to have 10 houses just to pay my bookkeeper for the month. Like what's going on here? I was promised that my 10 houses was going to get me out of this thing. And so I'm having struggle. I'm like, one debt service payment, one HVAC, one bookkeeper payment, and I'm back to where I started. And I'm like, I can't leave I'm going to have to buy like 500 houses. Yeah. So I was like, this isn't sustainable. I'm not going to be able to make this work. So I said, I got to buy bigger stuff or I got to do something more than I'm doing now. So that's when I started flipping houses. And I was like, okay, well, at least this way I could put 20 or 50K in and get 30K profit. And I could do that, just as fast as the Burr method. And that was great. But now I was like doing 10 of those at a time. Like there's a lot of fires to put out, a lot of problems to deal with, a lot of running around and signing these things and wiring this. And, and I was working full time at that time. So that was a challenge from a time perspective. So that's when I said, hey, I have to think about how do I buy bigger stuff? How can I buy 50 units at a time, 100 units at a time, get some scale where one asset that I work on for, instead of working on a single asset for 3 to 12 months and making $100, I could put the same effort in and maybe make $1,000 or a couple $1,000s a month in cash flow, and then hold that for the long term. So that, that journey, that realization was about a 2-year period of time. I started meeting some new people, getting involved in some like accountability structures that helped me not just be accountable, but also kind of elevate my mindset around what I could do. So I started running out of money.
Yeah.
So I started running out of my own money. A couple birds go the wrong way, and it's like, well, now you don't get to take the money out of the property. And I was like, what do you mean? I was getting all the money back, and now I got 17 properties going at the same time, and I need that money to do the next one because it's under contract and it's it's in the conveyor belt. And so I'm like, okay, well, now I sort of have to raise money, and I decided, hey, that was going to be a lot more manageable rather than having 17 different addresses to run at the same time. Was to like, hey, let me just buy one. And so that was in 2017, 18 that I started buying bigger in the housing space. And so bought a 36-unit apartment complex with the BRRRR strategy in mind, right? Buy it, and then I was going to fix it up, rent it back out, and then refinance it. Did that, and then was making $5-10K a month in cash flow from that property, and that's when I decided to leave the job officially. Instead of juggling both at the same time, leave the job and go into real estate full time. But that was also the time when I ran out of money, like from a capital perspective. So I had to start looking for JV partners.
So let's dive into that a little bit, because I think that the money issue, I know for a lot of people, right, is like that's the one big mountain that most people cannot see beyond, and for a lot of people it just totally prevents them from even starting and taking action. So you obviously were in the game, you're getting active, you made that transition into the commercial space, a little bit of a bigger price tag, and you felt like you were somewhat tapped out. So talk about your psychology, your strategy, your approach on how you kind of like went back to the drawing board and said, hey, I want to keep going and building my portfolio, but I'm going to be, somewhat hamstrung on capital, and I'm going to think about how I need to put my capital and partnership stacks together to, be able to scale without it all being solely relying on you. So what was your approach there, and what did that next deal look like with that strategy implemented?
Yeah. So when you look back, everything seems to be some sort of like neat story that you're like, wow, that one relationship that I got from that one thing that I almost didn't go to
changed it all,
set up the success for the rest of your life, right? And
so crazy.
But unfortunately, I'm going to tell you that story anyway. And so basically, and I'm allowed to go. So like I joined GoBundance, like you could, that's obviously I would assume most people who are listening to this are familiar with GoBundance, but basically, I from joining GoBundance, I met a lot of really awesome people who were doing great things, and there was like a no limits mentality, right? And so I think it was like, and I'm sort of a competitive guy, and so I'm like, well, all these other people are doing this stuff. I mean, I could do this, like I'll just, it's not a fake it till you make it, but I'm like, okay, I look at all this, I could do this. I just say the things that they're saying. I'm putting one foot in front of another. I've done the same stuff. I know what I'm doing to some extent at this point. And so, and then I, had this small group accountability structure, and I was really able to like meet with people every single week. And so that was like a huge for me in being able to move from really going from W-2 to like entrepreneur status, like that accountability structure, that group of individuals really was a huge thing for me. And then additionally, I two other pieces. I started going to conferences, and I went to this conference hosted by Joe Fairless in Denver, I live in Boulder, Colorado, and he calls it the best ever conference, which is his brand on the marketing side. And at that event, I ended up meeting a guy who invested in one of my deals, and then eventually became a JV partner. And then we ended up buying like 1,000 units together. And we ended up putting like a couple $100 million. We ended up buying a couple $100 million worth of property from just going to this event that I would have, that I wasn't that thrilled about going to necessarily, and met this guy. And within a year, we were doing, huge deals together. And then a few years later, 100 million plus worth of opportunities that we had to be able to purchase and put in the portfolio, all in the multifamily apartment space. And then at that event, also, I met one of the speakers there was Trevor McGregor, he's a coach, and he was the guy I'm not getting paid for this. I'm just, Trevor's not my coach anymore, but we worked together for probably 3 or 4 months for me to raise my first $1 million. Like, it was like, how do I go from beggar to I'm bringing you an opportunity, right? How do I switch off from Oliver Twist to, whatever, right? Like, hey, actually it's a symbiotic relationship. Like, you need opportunities to put money to work. I have opportunities I need money for. And it's a kind of, it's a good relationship. So that mindset shift of going from using my own money and having it all on my own back and the problems of my own to, hey, I need to raise money. And how do I do that in a way from a position of authority and strength and, confidence. And so Trevor really helped me with that, got me my first $1 million raised on my first, not my first multifamily deal, but my first, third-party raised deal. And then, haven't looked back since then, raised a couple $100 million in equity since then.
Amazing, dude.
So thank you, Trevor.
Yeah. Thanks, guys.
Yeah.
So, because it's funny because I was saying I think everybody can look at, going back on their timeline of life and look at certain relationships that completely just changed their whole life, right? And it was usually some very simple action that led to that relationship. Right. But it oftentimes was like a risk, or it was stepping outside of your comfort zone. Right. And I always love to hear how, obviously there's a lot that went into that relationship of building that trust to, having somebody, feel aligned with your goals, their goals, the vision, to buy a couple $100 million worth of real estate. Like, that's no small task that you guys accomplished. When you're looking back on your partnership, what are some of the foundational building blocks when it comes to structuring quality relationships and partnerships, whether that's with general partners or limited partners on commercial real estate deals, that you would say has worked really well for you and the success you've had?
Yeah. So I've always been just maybe a little bit even maybe too honest. I don't know if that's
a good thing, brother.
You can be honest, right? But I always found that coming from Wall Street and seeing how the IR people would talk to clients versus how the deal teams would talk to clients. And I always felt of myself as more on the deal side. And so I was there was always a little bit more of a sugarcoating as it related to how the IR team was saying something about whether it was about performance, metrics, or it was about the story or whatever. And I always came in with this really candid approach around what I thought. And I always felt like the investors that I always resonated with really appreciated that, because a lot of them are really successful entrepreneurs or business owners, and they're all day, people are just telling them what they want to hear.
Yeah.
And so when you tell someone something that, not necessarily that they don't like, but that's, more honest than maybe what other people in their life are saying to them that are always yes men, then I think first of all, it kind of shows you more as someone who, this is a peer relationship that we're going into. Right?
Yeah, right.
This is not something where I'm begging for something. I'm going to tell it how it is. And then if this makes sense to you, then it's going to make sense and we should do business together. But if you don't like my approach as to how I'm candid about what's going on, then maybe this isn't a good fit, right? Either partnership, either LP, GP, whatever. And so I found that, and then it also repels people as well who aren't the right avatar, who are well, actually, I want you to just tell me how, roses and stuff. But it's well, I have to set the right expectations. And if I don't set the right expectations, you're just going to be mad at me later. I'd rather you just be mad at me now, and then we just don't go forward with it, than us, get into this, what is eventually a 10-year relationship where we're constantly in friction because you're well, you told me this thing that was 90% true. I'd rather just be 110% truthful. And I'm not saying other people are going out there lying. It's not about lying. It's just maybe I come off sometimes a little bit sharp, is what maybe my current partner would say. He's don't get Michael on a call with an investor. But then as time goes on, I think what my current partner has realized is actually that plays pretty well in the space, especially with the type of investors that we are looking to work with, which is folks that can write $1 million checks multiple times a year or $10 million checks. They're in the business of doing business, and they want to hear the truth. They want to hear it straight, and they don't have all day long for you to spend an hour getting to the answer. Just tell me how it is, and let's move on.
In the world of numbers, right? It's not about fluff. It's about facts, data, and like you said, to your point, which I think is obviously a testament to the success you've had, is people just big boys and big girls that are playing with big checks, they don't get their feelings hurt. Like, they really don't. I mean, there might be some egos in there, but oftentimes it's really about just getting to the end result. And do I trust the person or the vehicle that is the one who's going to get me there, right? And that honesty, that candidness. I think delivery, obviously, of course, is always, there's a way of doing it that, can be maybe a little bit more digestible than others. But I think that's something that you talked about and is really important for people that are thinking about relationships, alignment, suitability, for partnership, capital deals, some of the things to think about when you're trying to connect some dots there. But maybe to...
Can I mention one more thing about, I know the other part of it, beyond like just being super honest and transparent with your investors or your partners, is just putting in the work. And so, like, if you're the people that you're working with, and this specifically going back to this partnership that I had early on, it was clear to who I was working with that I knew I had the knowledge base, I had done my homework, I was devoting an enormous amount of time and attention, and I was treating the opportunities, the money, the relationship ahead of myself, right? So it was their money is even more important than my money, and nothing is more important than the deal and the relationship, right? And so I think the way you can show that is not by saying it, is by doing it. There's opportunities in deals. Whether it means canceling a deal and taking a loss personally, which I've done several times, which feels really bad, but I've never gotten so much loyalty from investors when I, got money from them. They wired it to the bank account. I'm into the deal for $100K already, and earnest money, due diligence costs, whatever, legal fees. And then I see something a couple weeks from closing, and I say, you know what, like, we can't do this deal anymore, or we can't do it the way I presented it. So we're going to return everyone's money. We're going to go back to the drawing board, and I eat the cost. And I think, whenever I've done that before, those investors are like, whenever there's another deal, you let me know and I'm ready to go.
Yeah.
And now it's not like a marketing tactic, because those deals had to get killed because they were, they weren't structured right. But that's the way. It's not just saying it. You got to show up and actually do that kind of stuff. And it'll pay off. Maybe not like, maybe it takes like 10, 20 years, but it does pay off, and you just got to be willing to take the long view.
It's that audio is aligned with the video, right? Like, oh, I'm going to put you first, but no, like what I'm actually doing doesn't necessarily reflect that, versus like what you're saying, right? Like my actions and what I'm saying are going to align. And the other thing I heard in that is that you're thinking about the lifetime value of this relationship. It goes far beyond just this one deal, right? So making sure that you always do the next right thing is what's going to set you up for success long term, which is really what this industry and this world is all about, right? It's a get rich slow industry. And the relationships are the foundation in which you're going to build something big and exciting, through. So I love that you talked about that. I want to back up a little bit to, you talked about maybe not everybody is, looking for check writers that are going to be writing $1 million checks a couple times a year. I think most would love to get there, but maybe take us back to that initial $1 million raise that you were working on with your coach, right? Like, what did that deal look like? What did that process look like? Maybe what were some of the hangups you were feeling like you were up against in the beginning, and how'd you overcome those, and how'd you achieve that, raising of $1 million for that deal, and maybe walk us through the deal a little bit.
Yeah. So, I gotta do another shout out to another person that was early. I'm a big proponent of education and masterminds and events and stuff like that at this point, right? Maybe I wasn't so much in the beginning, but now I've seen the light. So I was in Michael Blanc's I don't know if it was a mastermind or whatever, but in his world, and he advocated for, and he's still out there doing stuff, and I, and Nighthawk is their like equity side of the business, and you know, it was a sample deal package. It was all about like, okay, you wanted to put something together that you could then go to people and sort of like practice, basically, like start practicing your pitch with retail investors who already know you and like you and trust you, right? It could be, even if it's at like your family or your friends or your colleagues or whatever, and you just present it as you take the pressure off. It's not about, hey, I've got this opportunity and in 27 days, my $1 million is going to be at risk, or whatever it is. It's like, hey, I have something that, might make sense for you based on what you've told me. And I love to just show you like an example of what a deal might look like if I had one in the future, right? So it's like nothing's on the line. It's totally like a hypothetical like conversation. And of course, people are going to say, oh yeah, sure, I'll help you out. I'll do that. So then you just get to have these conversations with people low risk. And I'll tell you more times than not, they're like, when a deal comes up like this, you tell me about it, right? They know what's going on. Everyone knows what's going on. No one just so everyone knows that whole thing is a soft, is it a qualification conversation, right? Is this the right opportunity for you? Are we a good fit? And so I think practicing networking in my local community. At the time I was raising money, I was living in Boulder already, and so it was about, okay, where are the the investment groups, the folks in the area who are already primed and interested in these opportunities. I'm not trying to create new people to be investors. I'm looking for people who already are writing checks to these opportunities, and they're looking for more sponsors. And a lot of investors on the retail side who are higher volume check writers, even if you're not writing $1 million check, they're looking for emerging sponsors who are small, because they're the ones that they're not on fund 4 or 5, and they're already, there are other people already deal sourcing. They've already made all their money, and they're, averaging down to the average return of the industry. These scrappier folks that are, doing their first $100 million of deals, their track record has to be tight. They can't be doing deals that slip by the goalie that aren't that great. We won't worry about it. It's set. There's 37 deals in the fund. It'll average out. Every deal is like your whole career. And so I think, the fact that, and they know that, and small funds tend to outperform large funds, early funds tend to outperform older, vintage funds. So, or longer, duration sponsors. So I think that is, so they're looking for us. And so, you just have to get out there and find those people, do the same. That's what at least this is what I did, right? I don't know if it's a prescription for everyone, but what I did was I went out there, I looked for people who were already writing checks in the community, in investment groups, in meetups, and things like that. And I presented it as hey, could you help me out? I'm new at this. And then I try to display my experience, my background, the deals I've already done, this opportunity as an example of what might be coming. And then if I get hey, yeah, I'd love to see the next one. And, you can have a lot of those conversations without a deal in front of you. And you do that, stack a few meetings a week for a quarter, and all of a sudden you've got, 30, 40, 50 people on a list that are already kind of primed and ready to get your first deal or your first money raising deal. And then that doesn't make it any less stressful when you go. It's honestly, when you go, I'm still getting stressed over deals, and we can raise, a lot of money very, very quickly at this point. And it's still, stressful trying to figure out like, okay, well, we're going to get a $3 million piece over here. We're going to get this $5 million over here. And, how long will it take us to get the $7 million we have to over here? And it's like a little puzzle piece, and it's, fun is like in there, but it's also stressful. And in the beginning, or now, there's still a stress to it because you're on the clock. So yeah.
And are you syndicating deal by deal basis, or do you have funds that you're?
Yeah. So we do both. We have like a fund that's it's a collection of our assets and kind of gets over a couple years of vintage. So we're about and that fund takes on about 20 to 30% of each of our deal. So they get it gets a little bit of a slice, which is great because it takes a little pressure off of each individual raise, makes each individual raise a little smaller. But it's a blind fund, so people don't know what they're getting into ahead of time. So as a return for that, we give them a little bit of there's no fees on the fund. It passes right through the deal level, and they get a little bit of the GP. So they get a little bit of a little juice above what they would normally get if they were we're just going an individual deal because they're going in blind. We want to kind of reward people for that. And then we do deal by deal, and we'll raise either from a combination of retail, in that 100K to 500K range per investor, and then we've got a kind of a stable of family offices that we work with that not every single one of them will invest every single time, but at least one or two of them will invest, every single time. And so with enough coverage across those different buckets, we could pretty much get, the deals done that we need to get done. And then we don't try to expose ourselves to capital raising beyond our capability, because that's only just one component. At the end of the day, we have to actually perform on the assets, and that's the most important part. So we can't be too distracted by constantly raising money outside of our comfort zone. But I would say I'm the pusher a little bit. I'm like, oh, well, hey, we just raised, $14 million early this year. Like, why can't we raise $20 million this time? Like, hey, it's fine.
Yeah.
And so I'm always pushing my partner. I'm more of the, I guess we use EOS. So I would say I'm more of the dreamer, the visionary, I guess, and then he's more of the integrator or the operator, and he's responsible for a little bit more of the brake, and I'm a little more of the gas.
Well, let's talk a little bit real fast on the future and looking forward. What are your thoughts and feelings on the commercial real estate market this year? We obviously know the last few years things have been a lot slower. It's tougher to make deals pencil. Cost of capital is challenging. Debt is somewhat restrictive in a lot of ways. What are you seeing and feeling out there? And what's your overall outlook on where you guys are focused and really putting energy and effort heading into 2025 and beyond?
Yeah. So we look at, we screened probably around 2,000 deals last year. We underwrote about 600 or 700, and we got, 3 of those under contract, and we closed 2 of them in the large space, right?
Say that one more time so people can really understand what that means.
Sure. So we screened about 2,000 deals, which just means it came into our inbox.
Yep.
Now we do our best to not get deals in our inbox that are triple net, single tenant deals that we're not going to do. So we do our best.
Nothing.
Yeah. We're mostly looking at apartments throughout the United States. I do like to look at other areas of the country just so I could do relative value analysis, but 2,000 deals to 700 that we actually underwrote, which means we got the data, we signed the CA, we updated the models, and we got to 2 or 3 times a week, we do a deal flow review where we look at all the deals that we've underwritten. And then of those, we'd send offers out on about 250 of them. And then of those, we got 3 of them under contract, and we closed 2 of them, which was about $50 million.
That's those numbers, right? When you look at from top of funnel leads coming in the pipeline to conversion,
it's a lot.
That's extreme. And I think that's what my point is, right? Like if people, I just want those listening to understand that the magnitude of how important it is to look at as many deals as you can. Because if you're expecting to, create real wealth and a career and stability in this industry, you can't just be hoping deals are going to fall in your lap. You can't just expect that you give a little bit of effort for 2 weeks and you don't get anything that, poor me. This is talk about your mindset around consistency and discipline on, you're only having a few dopamine highs per year if you're only closing that amount of deals, right? So talk about how you're weathering the emotional roller coaster around discipline and action and what's really required to succeed as an investor.
Yeah. So to that point, we also have this single family business as well, and it's more direct to seller type of stuff, distressed properties, and that we may see 20 opportunities a day from our, from Facebook, from cold calling and texting and voicemail drops and mail and all the nonsense that happens in the single family space. And so that's where we get a lot of dopamine, right? So it's there's all the action over there, right? Pick up a deal, you work it hard, and then it falls apart, and then it maybe comes back in a month. And so that's really great for the, now that being said, of those 20 deals that come in, we still may only get 1 out of 50 of those opportunities closed, right? Or sometimes 1 in 100, depending on the strategy that we're executing on, right? Like if we're going direct, if we're going to brokers, it might be like 1 in 200 offers we make gets a deal done. Whereas we're going with like a Google search, and maybe 1 out of 10 deals gets under contract, and then only 70% of under contract deals get closed. So, so anyway, so that's how we get our dopamine. But so far as, being patient, and really thinking about it, I would say, we didn't get here overnight, right? Like we had to work to build our acquisition engine at any of our companies over a long period of time. The right people in the right seats, doing the right activities every single day, having the right KPIs, making sure that we have the right systems. We're constantly thinking about automation and efficiency so we can look at more deals. The more deals that we can look, the better we can get at pattern recognition, the better we can then understand like where the opportunities are, and when we see an opportunity, we want to pounce on it, right? Because we're like, oh, like we looked at 50 other deals this month, all in this state. And like this one, for some reason, because of the deal story, because most of the deals we do, we're the second or third buyer. We're typically not the highest price. We're typically pretty reliable to close though. So, typically that high flyer price point that, goes under contract the first time, especially in this bumpy market, they typically can't get the deal done. So I would say of the last big, any deal I've done in the last 3 years, over $10 million, I have not gotten it done as the first buyer, and they were, I think, pretty much all off market. So now that doesn't mean there wasn't a broker involved, but it just means that it wasn't necessary. It was maybe recently listed and without a contract. That exclusive went away, and then another broker picked it up and showed it to us. I would say it's patience. It's you build your system over a long period of time. You learn a lot of lessons as you go. Like we've been perfecting this and still perfecting, and I expect to get, I expect to get 10 times better at this over the next 10 or 20 years than we are today. And we're definitely 10 times better than we were, 2 or 3 years ago. And we've been working on this for 10 years already. So it's not an overnight thing.
Talk about your outlook on AI, prop tech, how that's transforming your business, transforming assets, the industry. What are you paying attention to on that front, or utilizing on that front?
Yeah, so we definitely have some at the larger level. I think there's on the commercial side, we've got some different types of like AI agents, voice and text, and various things that we can do to help with resident satisfaction, R&M requests, paying rent, dealing with leasing, things like that, like off hours help, especially. Yep. We do find that, voice AI is not yet there where if we can have a person is better. But if we have no person, an AI is better. So if it's 9:00 at night and there's nobody answer the phone, it's great. People know that there's no one there. And so if they can talk to a robot, and it's not like press 1, do this, press 2, do that. It's, relatively conversational, and it's pretty darn good. And I think another year from now, it'll be maybe indistinguishable from a human. So I think there's a lot we can do at the large space there. I haven't seen it significantly reduce our staffing needs at properties, but it has made our staff more efficient, allow them to focus on the really, really, really important stuff like collecting rent and making sure our residents are happy. Those would be like our 2 top things that we need to make sure, because that really goes to the bottom line in both cases, and in the leasing. So, that's how we're using it on the in the bigger space. And then, from a underwriting perspective, we have, most of our underwriting is relatively, now I wouldn't say automated, but we are able to move information and translate it from one program to the next pretty simply. So going from OMs to Excel, and then from Excel outputted into a Word document, a memo, or into a presentation. So but that's not something we figured out, for a while. It took a while to get to that point. Yeah. But we could definitely get from one place to the next along that pipeline much faster and efficiently, and then track it for accountability in a better way, right? We have a lot of triggers that move things through pipelines without people needing to do manual processes. And then on the single family side, there's just like a crazy amount of opportunity as it relates to people coming in to do different tools. around underwriting, that's primarily we're using it as underwriting, computer vision for assessing construction costs. Oh, that's great. And then being able to provide just internal tools as well. We have these internal AIs like small LLMs where we're able to like create a department persona. So if someone has a question about HR or someone has a question about a specific deal, they can say, well, what happened? They can just ask the bot what happened with the tax appeal in 2021, and it'll scan everything and just say, oh, well, this is who handled it, and this is what happened, and this is the follow-up, and since then this happened, and just like what you're able to just having perfect recall. Maybe that's like another way of grades. It's Google Drive on steroids, because you don't have to find where is that information. You don't have to worry about that. You just type in your question and then the output comes in. So that's been pretty awesome as well. So a lot of different things all over the place for sure.
That's amazing, man. Now, I know you're always thinking about bigger and better, right? The next mountain. So I'm just curious. I always love understanding and seeing from the lens of big thinkers and big action takers. Already you've achieved some big things, but you look forward over the next 10 years. What do you envision happening? And what's getting you excited right now?
Sure. So I have 3 young children, and I've got another one on the way, and so I'm really excited to see them all grow up. In 10 years, my oldest will be going to college or leaving the house. He'll be 18, and so we'll be kind of moving on to the the sort of that next phase where people start leaving the nest, and so I'm really excited about watching my children grow and our family kind of develop and experience the next 10 years and not letting it go by too fast, which I'm sure it will, in retrospect, go by really, really fast. And then on the business side, and then just enjoying that ride with my wife, of course, as well. So, on the business side, one of the things I'm really excited about is, started the career in single family, moved into commercial as this thought that was the thing to do, is like, okay, well, the way to create efficiency was to just go bigger, right? Like do bigger and bigger deals, less deals, bigger and bigger, because again, like the labor time savings thing and everything. And that all made a lot of sense. And that's great. But there's so much fun to be had in single family, and there's so much fun to be had in helping people get off the ground, because, as much as I love working with people who can write $1 million checks, they are already rich. And they've already, they already have time freedom, or if they don't have time freedom, it's because they set up their life that way. And that's what they really wanted, even though they said they wanted time freedom. So, they have financial freedom, they have time freedom. All I'm doing is making sure their grandkids, their great grandkids, are well taken care of. And that's a great mission. And I hope to be able to take care of my family in that way as well, and make sure everyone is, has housing and the education that they need, and, is safe and whatnot, and can pursue their passions. But at the same time, I think there's nothing, you can make such a bigger impact at the 0 to 1 level, where people are just trying to go from their W-2 to an extra couple grand a month so they can make rent and have a little bit more money every month, and not always being behind or going to that first 5,000, 10,000 a month. And so that's why, and that's what I'm really excited about, is we have an education community, and we're helping people kind of get off the ground, go from their 0 to 1, and then that their first dollar and their first 10 or 10,000 a month or $50,000 a month, and really trying to create a bunch of people who are trained and experts, so that they can ultimately, long run, bring us opportunities that we can do, right? Bring them to our deal desk and have us, help you out, joint venture on those deals, get you through those critical moments where every deal is your whole career, right? Like I said earlier. So that's what I'm really excited about, is continuing to go bigger and bigger on the carbon side, buying not necessarily bigger assets, because I do like the middle market space, that $10 to $75 million space. I think that's somewhere where the retail investor can do really well, and you can get good returns. You're not competing with institutions. And then I'm really excited about working with folks who are just getting started, helping them getting off the ground through our education, and then hopefully they work with us. And we don't charge for any of that. So the hope is that we teach them enough that they're able to find those deals, and they bring them to us, and we can help them get those done.
Well, it's I'm sure going to resonate with a handful of people that maybe aren't looking to dive into commercial and they just want to get their feet wet in single family. Where's the best place for them to connect with you and learn more about that?
Sure. So they can just go to my website, michaelpoulio.com, and from there they can find all sorts of things and see if anything's a fit.
Michael, thanks for coming on the show today, brother. Appreciate you.
Yeah, no, it was awesome. Thank you for having me.
Well, that wraps up today's episode. Thank you so much for tuning in. As always, you guys know this show would not be what it is without you, the amazing listener, the support, sharing this out with other people who can gain value from it, taking 60 seconds to leave a review. If you haven't done so already, those things mean the world to us and ultimately help us spread this message out to as many people as we possibly can to help them on their wealth building journey. If you have any particular links or resources that you're trying to track down that were mentioned in this interview, be sure to check out this episode at millionofmindcast.com, where you can find access to all that information. And of course, if you haven't checked out the Wise Investor Vault yet, be sure to head over to wiseinvestorvault.com to check out all the tools, all the resources, the checklists, the spreadsheets, the trackers, all kinds of amazing things that can help you on your wealth building journey at the wiseinvestorvault.com. If you haven't connected with me on social media yet, I'm consistently putting out more content, stories, value to help you on your wealth building journey. And one of the best and most exciting things for me on a weekly basis is getting to connect with you guys. Getting your DMs, hearing what things impacted you, what you need help with is a big way that we continue to drive the content for this show. So if we're not connected and following each other on Instagram, on social media at officialmattia, give me a like and a follow. Would love to connect with you there. And of course, don't forget to get on my deals list. If you're an accredited investor, you want to look at more deal flow. You want to see what deals I have access to, what deals I'm raising capital for. This is an exclusive list that I only put out to my accredited investor list, my Million of Mindcast family. So text the word deals to 844-447-1555. And with that being said, thank you again so much for supporting the show. Until next week's episode, keep investing in yourself and your wealth on your march to $1 million and beyond. Cheers.